Perhaps no surprise following yesterday's increased inflation figures that the bank have decided to stick.
Yeah, no surprises on that headline rate, 4.75%. The bank voted to keep interest rates on hold. But what I think is arguably more striking is the policy rift that's starting to emerge on the committee, with 6 members voting to keep rates on hold, but another 3 voting to cut them. And I think what that reflects is some of the competing challenges that are facing our economy. So inflation is above target. Inflationary pressure is proving persistent and stubborn. But at the same time, economic growth is flatlining, and the economy could really do with a boost. And that's the inflation, economic growth bind that central bankers are faced with. And it also has been exercising the markets. So over the past week, we've seen some pretty volatile moves in the financial markets, where investors think interest rates will end up, what the trajectory of those interest rate cuts are, and what markets think matters, because that feeds into the Bank of England's own forecasts. And it also has consequences for the pricing of our mortgages. So there have been some swings in what the markets think. And let's start with that current figure of 4.75%, because there had been some hope that the Bank of England might squeeze in one more interest rate cut before Christmas. But those hopes were all but dashed over the past week on the back of some economic data, which gave central bankers cause for concern. The big one was data on wage growth. Wages are rising at 5.2% in the 3 months to October. Good news for most of us after years of stagnating living standards, but it's uncomfortably high for the Bank of England. The fear is that higher wages in the economy lead to higher inflation and so on. So worrying news on wages and also on inflation. The headline rate, as you said, came in at 2.6% for November. That's above the Bank of England's 2% target, although it was broadly in line with expectations. And all of this has reduced expectations for the Bank of England's pace of interest rate cuts. The bank's central forecast was for 4 interest rate cuts in 2025, but markets are now expecting something like 2.
Gurpreet, thank you.